KG Francoeur, Jennifer Hunt. Here we are, Facebook, and we're running a little bit late. We were going to do this a while ago, and then we got pre-Facebook conversation. We got talking about the economy, and so that, anyways, hey, we're here. We're going to talk economy.
And we're sorry we're late, but we've got a lot to talk about. I can tell you that.
We had to just settle Jennifer down. She's like totally nerding out with.
Well, listen, nerding out is one way to put it, Patrick. Another way to put it is we were trying to cram a master's economics course into a Facebook Live. I mean, that was our there for a little while.
Okay,
hey,
so
Rain community, you know I want to over deliver, and my God, you've got so much content coming to you, and I'm so excited to share it with you.
Well, it's great to have somebody that is geeky as you leading the Rain research team, Jennifer, and we want to talk about economy today. That's one of the things that we want to talk about. A lot of things have come up, and just even some foundational stuff, because as we listen to the news, we hear what's going on in the U.S., there's lots of conversation, lots of questions that come up to us, particularly about, things that are on a lot of people's mind. What are interest rates really going to do? And what is this thing about inflation, deflation, and nobody seems to know which it's going to be. And then all of a sudden somebody throws a curveball in going stagflation. Well, what the hell is stagflation?
Up until they threw in the stagflation option, I was just going to flip a coin. I thought, let's go with a 50-50 and see what happens.
Yeah.
No, we got you. But, those are really important questions for real estate investors and home buyers. What are interest rates going to do? And looking into the future, for example. And we might think that we know what's going to happen because, everyone's saying the interest rates are going to be low for forever. Yes, that is absolutely. They're not going to be going up too much, but there is another layer. And this is where we don't have time to go into it today with the Fisher effect and the doom vortex. I know they're big terms, but when we talk about them and I share them, there's another added layer of risk premium. And when we start considering what banks can, so I just want to say this. So central banks, they set their overnight lending rate. That's it. So they've got that. Banks, commercial banks, do not actually have to follow. They get to set their own margins. Did you know that?
Of course, yes.
So
well, I know that.
I know you know that. I'm asking our viewers, did you know that? So the Bank of Canada, for example, could set an interest rate and the commercial banks can choose to ignore it. Mm-hmm. Additionally, they can add on what's called a risk premium. And so if that means, just like if you're lending money to somebody and you're like, man, I don't think I'm going to get this money back. So you're going to charge a bit more of money, a little premium on your interest rate.
Yes.
They do the exact same thing.
Well,
and so when we add that in, we might see something different in the interest rates.
Well, it might be just it might be the lending rules, if you will. Keep it simple. We'll just say how they land and how that goes. But I want to say this around it all. I mean, we're all real estate investors. We're all still very, very bullish on real estate, but we qualify it with a couple things. We're bullish on real estate when you understand what's going on economically, when you understand what's going on economically, even regionally. So we see the stats that are happening in, let's say, downtown Vancouver or in the GTA, and the shift in what's happening with condos versus detached or semi-detached. Like there's a lot of things that are happening. There's regional considerations. There's property style considerations. There's what's happening in the bank. There's what's happening economically with unemployment, with immigration, because that slowed down. There's just a lot of things. Now that's all to say that real estate is, especially right now, we talk about financial security and certainty and financial freedom because these are goals that many have. And when we look at having financial security, we know that real estate works. It provides that level of security and certainty. And especially when the economy is upside down, when you start to apply the right strategies and the right tactics, given what's going on economically. So that's a little bit long-winded, but I want to say that it's important to understand that all of this is going on, and real estate is still a place to go with capital. and a place to create a financial future.
I want to come back, Jennifer, to what you were saying a while ago, because, you know, and you're right that a lot of people don't understand that. We understand that, but a lot of people don't understand that the rate set by the central bank isn't the rate, you know, like the banks can make up their own minds. We've already seen this at the beginning of COVID. The central banks brought the rates down and the rates actually went up in the mortgage market.
That's right.
That's because of the risk premium. They didn't know what was going to happen. It started leveling back out. But hey, there's nothing to say it won't go the opposite way. So when people say rates will be at an all-time low forever, they're actually saying the central bank rates are going to be at an all-time low forever, not the bank rate. And we as investors borrow from the bank, not from central bank. Although,
nailed it.
is there a way to get access to the central bank? Because man, maybe I could tap in.
Yes, so there could be a way to get access to the central bank. However, if we go down that route, and this is a big rabbit hole, we're not going to do that today, but in this longer presentation, I will share that as a scenario of what would happen if the central bank worked directly with people and actually didn't go through the actual commercial banks, and what that could look like from a scenario perspective. Mm-hmm. And ultimately, that would lead to hyperinflation.
Yeah, and at the end of the day, there's and this is Canada's system. I mean, the U.S. has their own system. The Europe has their own system. I mean, every system's a little bit different. And back to Patrick's point of regionality, this has microeconomic effects, which then leads us to the microeconomic effects, which then leads us to some regional components. But at the end of the day, Patrick, Jennifer, most people, and this is what we teach our investors at Rain, it all comes down to the regions. You got to definitely look at the macroeconomics. There's no doubt about it, but you have to really pay attention to the regions, because what happens in Abbotsford specifically doesn't necessarily affect me in Peterborough.
100%. And right, like from regions, and we actually go into the neighborhood specifics. I mean, you need to know the street. You need to know your neighbors. You need to know who's on it, what's going on, and why you want to be investing there. And that's why we've got so many tools at Rain, like including the Rain Property Goldmine Scorecard, that's the first place to go, because it's got all the questions that you need to get answered for understanding your macro right down to your micro.
Well, I'll tell a story about that, Jennifer. And it's, you know, I'm always typically telling the positive stories, but I've been having an issue with this one particular property recently, because I'm right beside the corner. So there's a corner lot and I'm right beside them. And there was a big development. And when I bought my building, all of us on that street were pretty much redeveloping that street. And we renovated according to what we had planned and where we knew the street was going. But we knew it would take 3 to 5 to plus years to get there. Well, the corner lot right beside us ended up doing a crappy job, a terrible job. And as a result, they put in the wrong kinds of tenants. And it really set the whole street back in terms of development. My point to that is, okay, so I'm stuck with this property now, and that's not great, but that's okay. I'll get over that. My point is this, it does get down to that micro level of, I had this market influencer beside me called another property that wasn't done right and they brought in the wrong tenant profile, and that is now affecting me.
You know, I love what you're saying there, JG, and that speaks to the home buyers course that we're preparing for first-time home buyers, first-time investors, not even investors, just like, do you want to buy a house? You want to get into that market, or you're a first-time home buyer? And you know what one of the topics is? Know thyself, know thy neighbor.
Speaking of this though, Patrick, I just want to draw on what Jennifer was saying, because she says first-time home buyers, but this course that we're developing is going to be for more than just first-time home buyers. It's for people who want to do a great job with home ownership, but don't necessarily want to become big real estate investors with 5 or 10 or 15 properties. They just want to do a great job moving through the home ownership plan, if you will.
We have to understand is that, you know, however we look at real estate, you know, homeowners look at real estate as an investment. They're investing in their home, and many are investing in their future because they're looking at it into 20 years and 30 years down the road. And so there is a great strategy, and there's great strategies in even buying a home and doing it thoughtfully and doing it in a way that you actually maximize and really leverage the work that you do and location that you buy and the type of house you buy and the neighborhood you buy. All of those things are considerations, and how you deal with the bank. Those are all ways to actually increase and really increase the equity that you're going to end up with in your home.
Jennifer, back to, I know that we weren't necessarily going to talk about this homeowners market, but this program we're developing, but it is important, and we might as well talk about it now, that not everyone should buy a home. You should actually, there's a comparative chart that we're working on renting versus buying. I know you're really passionate about this, but not everyone should be buying a home.
So
you don't say that. I've come up with another spreadsheet, hey? Yeah. So yeah, ladies and gentlemen, 100%, there are times where it doesn't make sense to buy. It makes sense to rent, and potentially rent where you want to live and buy in a different market as an investment. And I have the math for you to do that.
That's a great distinction. Rent your home and buy investment real estate. You know, there's a strong argument. Rent your home, let the landlord look after all of the stuff, right? Get a great landlord, get a great, rental property, and then go be a great landlord in a cool area, right? So
yeah,
strong arguments for that either way.
Now, I want to come back to our economics lesson here, folks, because we promised some deeper economics. We talk about inflation, deflation, stagflation. All of this, Jennifer, is driven by this thing called a CPI, right? The Consumer Price Index. I mean, that drives this basket of goods that they measure. That's what drives the decision. Now, one thing that we have to watch for, and I'd love you to dig into it, is this definition of CPI. It's modified kind of, it's got a standard definition, and then they kind of like willy-nilly include stuff or don't include stuff based on what they want that headline to say. Is that not right, Jennifer?
Before we get into CPI, I want to say one thing, is that the actual definition of inflation is when they start inflating, when they start printing money, when they start producing capital like they are right now, that is actually inflating. So that's different than CPI. So even in the definition of inflation, without getting into economics and confusing any of the issues, we're talking about CPI, and that's something important to actually make that distinction.
So two things. One is in order to make sure that I live up to my commitment to our REIN members at our REIN member meetings this week, where I did promise to go into a super deep dive of economics. Again, I just want to mention that we collectively have decided that this isn't the place for it. We want to make sure that you have this content exclusively in your member back office. So we're going to do the diligence that it requires so that you have the information that you need. So just to get that and live up to my commitment, because that's important to me and my word. Then now, JG, you're talking about CPI. Well, I want to start with this inflation and deflation, and just in very layman's terms, deflation is basically that there's kind of less money in the region, in the world, in the nation, whatever, that's chasing the goods and services. Whereas inflation, there's more money chasing more goods and services. That's ultimately it. So you end up seeing that inflation, prices of goods and services go up because there's just that much more money, and it means less. And then we get into even understanding how that could happen. What is fiat currency, for example? Do you want to know the Latin word for? Fiat is a Latin word, and it basically means by decree, by belief, by authority. It means that it's just a statement. It's not backed by something. So therefore it can be anything. It could be anything. And and in this case, in these times of pandemic and these changes in all of the quantitative easing and the monetary policy and the stimulus packages and the fiscal policies and you name it, and the deficits that are going up like crazy, we are seeing an impact on what fiat currency could even be.
That's such a big conversation, right?
I know.
We can't go there because that's way too over there, right? But I do have and we talked about it briefly, is that
having us not go there is like taking a Ferrari, put it on the racetrack, and just stay in first gear there.
I know. It's like I'm ready to go. But that said, so who cares? Why does this matter to real estate investors or home buyers?
That's my question.
Well, I got to it first. And it matters because what you're saying, Patrick, and what we've all been saying is that real estate is historically the most stable asset to weather turbulent times. Full stop.
Yeah.
Full stop. So
why is that?
Well, there's a number of reasons, but it's tangible. For example, it's a physical asset, physical land, even just the land itself, and people need a place to live. So even if you want to dive into that even further, historically, the asset type within real estate that is the most stable is not commercial retail. It is not office space. It is none of those. It is multifamily apartment buildings, because people need places to live. And in turbulent times, they can struggle to pay their mortgages, and then they end up needing a place to live, and that would be your apartment building.
Can I?
Or mine.
So do you know the other reason? And this is one that doesn't get talked about, which is the banks need a reason to lend money.
Oh, we're going to go there.
And so
I feel like we just went to second gear, folks. I feel like we just went to second gear.
Well, I mean, let's face it. I mean, where are the banks going to, what are they going to lend their money if they don't have something to lend it for? And of course, House is just brilliant for that. They're definitely not excited about lending it to SMEs, which we're starting to actually hear about and feel the ramifications of that, because that's way too high risk. Oh, you've got a solid asset. Settle down. I'm not finished yet. So then I
gotta define something though. So for those of you who are listeners who are wondering what the heck are SMEs, that's small and medium enterprises. Those are small businesses. So go on.
The small and medium businesses, which happen to drive 70% of our economy or more. Yeah, for sure. I'm being conservative just so I'm not overstating. I don't want to overstate shit. But the point is that now banks have a reason. So that's one of the other reasons that housing is what it is, because the banks need a place to lend money. And so otherwise, how do they make money? SMEs are too risky. I mean, forget about the fact that they drive the freaking economy, but a house on the other side is pretty safe.
Well, that is the banks at the end of the day, their product, what they sell is money. They have lots of it, and that's their job, is to put money to work. Yeah. So, the real estate market is a great safe place for them to move a lot of money. How much, Jennifer, is tied up in the real estate market across Canada? Do you know that number off the top?
I don't know that number off the top of my head, but I can explain this in a different way or augment what you're saying. If you think about your buying a piece of property and the percentage of ownership that you actually have, let's assume that you're going to get a mortgage with the bank. What loan to value is fairly typical? What down payment do you need?
2080.
So that means that in terms of the value that the banks place on real estate is 80%. Like they give a lot of crap. So they care about it.
If I go for my small business, they want my house, they want my children, they want all of what I've got as security.
Exactly. So they are placing a very high level of comfort and when we talked about risk premium earlier, this is a way for them to mitigate it. So if the banks are mitigating their risk premium through real estate, guess what? You should probably be doing that too.
Not a bad point. Not a bad point right there. One of the things that's really interesting, because at the end of the day, the interesting question that people keep coming back to is, okay, so what do we do? Not everyone, but everyone in our community is after financial security, financial certainty. The stock market is the stock market. Real estate is going where real estate is going. People own businesses. What are they going to leave their money in the bank? I mean, what do they do to create financial security and financial certainty? Our assessment is real estate is still the place to go. Real estate is still the safe place to go. It's still a great place, but you have to be more sophisticated than ever before. And this is something, and I don't know how you feel, Patrick, because you've been saying that for 20 plus years. But the point is this, that we've always said that. It's always been true, but man, is it more true today than ever before.
I think that's such a good point is that, with what's going on economically, how do you actually work to secure a future in a very uncertain world? And, that's really what it is. And it boils down to the education. It boils down to the research, economic research, and then having the education to know what to do with that research. And then being able to leverage your capital in a way that sets you up and your family up for a financial future and investing in real estate. And then surrounding yourself with the right people. We talk about it all of the time. Community, culture, environment. That's, REIN's been around 28 years. That's really the secret sauce right there. Put yourself with like-minded individuals and a culture that is collaborative and that people care. And then that really is an environment for you to succeed. And that's how you can set yourself up for that security.
And I'd like to, sorry, go ahead, JG.
Go.
Thanks. I'd like to acknowledge that and also acknowledge maybe.
She's frozen.
He's frozen. Oh, it's that good old Microsoft Surface doing what it's doing. So we're gonna jump in. But Patrick, the point is this: is that we do these Missing Million segments and we do these Facebook Lives in order to help people understand and help people be confident in moving forward and give them a sense of security so that they can drive forward to establish financial security and financial certainty. But we have lots of events, Patrick. We're doing more events now than ever before. When everyone else is shut down and not doing anything or helping anyone, we are actually doing more events than we've ever done before in our 28 years of being in real estate. So the point there, Patrick, is that whether you're interested in joining us for one of our Winning in Real Estate events, folks, come out to one of those. We have an intensive at the end of every month. Patrick, that's 6 hours of deep diving into the 15 steps of real estate success. We have our big summit coming up, Patrick. Tell us a bit about that. That's November 13th and 14th.
November 13th and 14th. So that's Friday, Saturday. And that summit, we're going to dig deep into a lot of things, including what's going on economically. Now, so we've got, and on top of that, Friday night specifically is all economy, all economists, all research. Todd Hirsch is going to be there. Carl Gomez is going to be there. Of course, we will all be there. Jennifer's going to be digging deep into a conversation with Carl Gomez and Todd Hirsch. Very, very well-respected economists. And we're going to be talking a lot about what's going on in Canada, Western Canada, Alberta. And so it's going to be a great event on the Friday. Then, of course, on the Saturday, we're going into, I don't know how many breakout sessions we got. 12 a dozen different topics, a dozen different breakouts, and a real opportunity to dig into what's going on in the world of real estate. Now, what's great about it is we think the timing of it is going to be very, very good. November, it's going to give some time. People are getting back to work, kids are back to school, and we're starting to, I think by November, we're going to be really in it.
Yeah, absolutely. And that's why we chose the date we chose for Summit, so we can have the right amount of data to do the right analysis. We're launching our new real estate cycle update, COVID affected, so to speak. Or should I say COVID infected?
COVID infected, I don't know.
We're going to be releasing that. So that's going to be really great. So folks, lots of events coming up. Check those out. Go to REINcanada.com. Check out our events calendar. There's tons of events. Every week we have events right now. It's unreal. And we don't plan to stop those. So
I think JG, the one thing I want to say is it can be a pretty dark world out there. Go with what's going on. If you're reading the headlines, you're listening to the YouTube that's out there, and now all of a sudden Canada's like, why are we spending all this time looking at what's going on with the U.S. election? Yes, I get that it affects us, but like every day, I'm finding that people, even myself, if you watch it, which I don't anymore, I just shut it off. But the point is, it's feeling pretty dark out there. This is the time to actually engage in a community that's looking at the world through a little different lens or a lot different lens, and actually working towards getting what they need in terms of education, support, the research, and creating that financial future, given how messed up the economy seems to be.
Yes. Jennifer, what were you saying there before you dropped off?
Yeah, sorry about that. I think my internet just died. Right. So I was just acknowledging that this conversation of, economics and research and these very broad topics, that they didn't resonate with me when I first started. I thought, well, why are we even talking about this? Why are we not talking about just, buying a piece of property? And it wasn't until I found REIN later, after I'd gone through, we're on Missing Millions right now, right? And I had missed some millions, okay? I had some mistakes. And those mistakes could have been prevented by actually understanding that this conversation, as much as it might be out of a comfort zone or confusing, it's absolutely material to your real estate. Like, absolutely material. And so I just wanted to acknowledge that it is a weird conversation for people. It was for me. And now look at I know that this is so important to my portfolio and to the REIN community.
Well, and the beauty is that, you love this stuff, Jennifer. You've developed a passion for it. You love to geek out in it. But that's what REIN does for its members. So you don't have to love economics, guys. You just got to know what's going on in the economics. And the good news is our team does all the work for you. So you just have to pay attention. We'll show you what to pay attention to. And that's the beauty. Don't think you have to become
definitely not
economic nerd. So anyway,
and I think even just what you were talking about with some of the subjects at the summit that we've got coming up in November is exactly like, we're going to talk some economics, sure, but you know what? The key nuggets in what we do on a regular basis at REIN is provide investor solutions. So ultimately, you know what? Even if you don't pay attention or pretend to pay attention, that's okay. I'm all right with it. But we've got conclusions that say, hey, this is what you should do, could do, and what it means to you. And then you're informed and you can make choices. You can make decisions, true decisions for your real estate.
It's all about empowering investors. Patrick, Jennifer, thank you so much. Ladies and gentlemen, hopefully you've enjoyed this edition of Missing Millions, and like and share this, right, guys?
Yes, do it. Like it and share it.
Thanks, guys. Have a great day.